please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Power Breakfast. We are at the Mumbai News Centre. I'm Nigel D'Souza and with me is Ekta Batra. Ekta, good morning.
Hi Nigel, morning. Well, we have a lot to reckon with today and I think the topmost cue would be ICICI Bank, which is going to come out with numbers today. So all that and more in the next 1 hour. These are top stories this Monday morning. The big story from Friday evening, where SEBI has allowed exchanges to extend trading hours in equity derivatives between 9 a.m. all the way to 11:55 p.m. This will be effective from the 1st of October 2018. The exchanges will have to seek prior approval from SEBI before making changes. In a conversation with cnbc TV 18's Yash Jain, NSE CEO Vikram Limaye welcomed the decision and said that the Indian investors will now be able to hedge their risks better.
It is bringing our markets more in line with international markets, whereas you know the trading hours for the derivative segment in particular are quite long and extended beyond the cash market hours. And so this is actually bringing our markets in line with global standards. It's a positive for markets, it's a positive for investors. Investors will have the opportunity to hedge market risk against any specific events that are happening globally beyond our normal trading hours. And so that should be a positive. Also, it aligns the equity market with the commodities market. Anyway, the commodities markets are open till 11:55. This segment will also be available.
Okay. One clarification which I would want from you, of course, the directive from market regulator says that equity derivatives will be allowed till 11:55. Would that only cover index futures or would that also be applicable as far as stock futures are concerned?
So obviously a reading of the circular would indicate that it is not restricted to index, because they haven't said that it's equity index derivatives. They've said equity derivatives. So that would imply that it is both the index and stock derivatives.
Does this particular directive look like a precursor as far as extension of market trading hours in normal market, cash market is also concerned? Do you think they're just testing the waters with this particular directive, and an extension in the normal market is also a question of when and not if?
I don't necessarily think so. Also because if you look at the global precedent and examples, you don't have examples of cash markets being open for 15 hours, 20 hours anywhere else in the world. So there's no reason for us to necessarily keep our cash markets open beyond our normal hours. But the derivatives markets globally are open for an extended period of time. So I don't expect the cash market trading hours to change just because the derivative trading hours have changed.
Okay, well, we have this and a lot more cues to work with this morning. Nigel, tell us more. What can we expect?
Well, Ekta, on Friday's trading session, the Nifty ended with a cut of around 50-60 points odd. And the key contributor on the downside really was ITC. That was down close to around 2.5–3% approximately. And that's what really led to some selling pressure. We had selling even on Sun Pharma in Friday's trading session. So the contribution chart really is telling you the picture. We were down 61 points. 17 of those points was only because of IDC. But at the end of the day, we look at the flows. And the flows, yet again, the FIs were sellers. They have been sellers. This time around, they sold nearly around 1,600 crores. And that's the biggest sell number we have seen since late Feb 2018. So that was quite a big number, 1,600 crores in a single trading session. Importantly, the DIs, they've been backing up this market. They pumped in more than 1,000 crores. And in this month itself, if you take a look at it in the last month or so, the FIs, they've been sellers. In May, they are selling. Even in April, they were sellers to the tune of roughly around 9,600 crores. The DIs, though, they have been backing up this market, and that's going to be quite important going ahead. So in the cash market, the FIs are sellers, but in the derivative market, they're net long. You know, they've got more long positions on the index futures. The good part is, if everything goes wrong, they've still got more puts than calls, so they have cushion on the downside. And encouraging to see, even when the markets are falling, they're still writing puts. Now, overall, the long positions are at around 56%. Yes, it's come down from the recent high that we saw of around 60–65% odd, but they're net long on the index. On Friday, though, they added a lot of short positions. Nearly around 6,500 contracts on the short side is what they added. But mind you, there was some buying as well on the index, because the premium on the index, that in fact expanded to around 40 points from around 27 points, though the FIs were shorting the index. On Friday, then, we had massive put buying. So they bought close to around 18,000 contracts odd. And entire of last week, 60,000 contracts is what they bought. I'm talking about put contracts. So there is a fair bit of cushion on the downside. You can expect that. Remember, we have the Karnataka state elections that will play out in the next week or so. Even in terms of a global queue, you're looking at what's going to take place with regard to Trump relooking the nuclear deal with Iran. So we should keep an eye out on both those two fronts. In terms of levels, what are we looking at? Well, the maximum open interest on the call side is at around 11,000. On the put side, though, it's at around 10,500. So I would imagine the recent high, that becomes a bit of a resistance. That should come up for you on the screen, 10,785. On the downside, we should see support at around 10,450. The key result, Ekta, as you said, is going to be ICICI Bank. We'll keep an eye out on that set of numbers. That's going to be fairly important today. And also a quick word, Brent crude prices, keep an eye out there. In the last couple of trading sessions, it had cooled out to around $73 per barrel. Today, in fact, it's back up to around $75 per barrel. So we'll keep an eye out on those stocks between President Trump as well as Iran.
Okay, and what are the other stocks?
Well, I mentioned ICICI Bank, so that's going to be one important number. But besides that, we got a lot of mid-caps as well that will be coming out with their set of numbers. So we should keep an eye out on a few of these stocks, the likes of Vijaya Bank, Zealand, we'll have Tata Coffee, Inox Leisure, Pfizer, all of them. They'll be coming out with their set of numbers. Well, we were telling you earlier that there's stock that, in fact, come October 1st, trading hours could be extended, particularly in the derivatives market. So maybe you could focus on BSE. If that happens, if they can ramp up their volumes, let's see what takes place on that front. So that could be one stock you could be looking at. Well, Fortis, there's not a single trading session that goes by without us focusing on that. Now we understand that, in fact, it's out on the exchanges. Manipal, TPG, they've sweetened the offer. So that stock should be in focus. Pharma stocks. Lupin's going to be in focus as well as Sun Pharma. Lupin because the company's Nagpur plant is getting inspected by the US FDA. Sun Pharma because its Panoli plant that was inspected by the US FDA over the weekend. Ekta will get us more details on that front. Besides that, we're looking at SmartLink. We've got the buyback price of around 120 rupees per share. They're buying back nearly around 25% of the total number of outstanding shares. So keep an eye on that front. Arihant, I'll look at that stock because, in fact, there was an interstate transfer. There was a gift given to an immediate relative. We don't like those things happening in the market, as we have seen in PC Jewelers. So keep an eye out on that stock. Result reactions, Wockhardt, well, a bit better on a year-on-year basis. Interesting to see how that stock reacts. Deepak Nitrate, well, the numbers weren't that great, actually, more or less flattish. Operating profit lower. BASF, well, some operating profit pressure there. In fact, there was a degrowth of around 20% on. NOSIL, those numbers look very, very good on all parameters. That stock should open up well in the green. SQS, well, those numbers look quite good. There was margin expansion, so good going there. Bulgaria, as flat as can be, those numbers. R Systems, well, those numbers, in fact, they looked a tad bit weakish in terms of the margin compression. Nida Gelatin, well, there the margins did look much better. In fact, there was a big expansion there. And a couple of other stocks like we'll be looking at for Avenue Supermarts. That's going to be important. 70% growth, maybe a tad lower than what the street was working with. But we'll keep an eye on that stock. In Indocount, well, those numbers looked quite weak. Well, the GST Council has unveiled a new, simpler return filing process. Currently, the industry is filing multiple returns, and the goal is to move towards a single GST return on a monthly basis. Revenue Secretary Hasmukh Adya unveiled a three-phase process. The GST network will take 6 months to set the stage for this transaction. Incidentally, the council also decided to make the GST network a fully public-owned entity. However, there was no consensus on the imposition of sugar cess. We spoke to the state finance ministers to get a sense of where the states stand on the sugar cess levy issue. Let's listen in to what they had to tell us.
All cesses have been substituted under the GST. Now, if you are going to bring a cess for a particular commodity, there are other candidates as well. I am, for example, in Kerala, I said, okay, then let's have a cess for rubber. Our rubber farmers used to get some 200 rupees per kg, are getting only 120, 90 rupees, between that range. So why sugar alone? We had to support these farmers also. So that was the thing. So it has to be a general thing. On the hand, if you want to support sugar farmers alone or sugar mills alone, then go for a general budget. This 10,000 crores of rupees will constitute hardly 0.5% of this whole central budget. So they have very buoyant direct tax revenues, which have been very buoyant current year. Therefore, let them to the budget route support it. Why bring in complicate things by bringing a cess? And if you are bringing, then well, rubber also must be compensated.
चीनी के ऊपर सेस लगा दो, ये था प्रपोजल। 3 रुपया पर केजी सेस लगा दो। इसके मतलब जो चीनी खरीदते हैं उनके ऊपर पूरा ये थोपा गया। उनके जो 3 रुपया मिला उनसे कहाँ जाएगा? जो चीनी के मिल है, जो चीनी के ओनर हैं, उनके पास जाएगा, वो देंगे फार्मर्स को। पहले बोला 10 स्टेट इसमें है, हमने हिसाब करके देखा 5 स्टेट है, 10 नहीं है। सवाल ये था कि जीएसटी में सारे सेस एब्जॉर्ब कर लिया जीएसटी, हमने सेस छोड़ दिया है, सैक्रिफाइस किया है, कुर्बानी किया है। आज क्या हो रहा है? एक आइटम के लिए पूरा जीएसटी को डिस्टेबलाइज कर रहा है।
Okay, well, the GST Council meeting also saw states express serious concerns about their revenue situation. In fact, sources say that that only 2 states, that is Mizoram and Arunachal Pradesh, are reporting a revenue surplus. Manipur is revenue neutral. 7 states have a revenue deficit between 10 and 20%. These include states like Bengal, Uttar Pradesh and Gujarat. 5 states, including Karnataka and Madhya Pradesh, have a revenue deficit between 20 and 30%. 13 states and union territories have a revenue deficit of over 30%. These include states like Bihar, Uttarakhand and Punjab.